what are some things you're watching internationally and on the trade front?
Okay, probably the biggest things internationally, it is the trade front. You know, all of the problems that the United States is having right now, getting anything moved. So what I'm really keeping an eye on here as we're closing out the 2018-19 marketing year is our export shipments. And they've been, you know, they've been horrible in corn. I mean, we're falling, we could come in 100 million bushels below what's projected right now. And so that could add to our ending stocks number, not only just in the September report, but when we get around to the quarterly stocks numbers at the end of September. The other thing is in soybeans, where we've actually seen some export demand picking up, but we just, you know, we still have this trade war going on. There's really nothing new on that front. U.S. dollar has been firm, Brazil real has been weak. None of these things are really providing any support to the U.S. markets. The same things that I've been keeping an eye on, probably going to continue.
And we've also been reading about an impending recession. Do you see any warning signs of that happening, or what does that mean for ag?
The great thing about the recession is if you were to put 12 economists in a room, not only would you get 13 different opinions on whether or not we're in a recession, no one would even agree on the definition or the metrics of the recession. So I'm going to stay out of that argument. But as I look at the ag, we are in a recession. I don't have any economic definition for it, but we are in a recession for ag, and I really don't see us getting out of it anytime soon. The problem is we still have too much supply to meet demand. If we start to strengthen our demand again, that could start to firm prices, maybe help ag industry out as a whole. Again, I just don't see it happening anytime soon.
So as we're getting close to Labor Day, before you know it's going to be harvest time, what are some of the big stories that you're tracking right now?
You know, the big stories that I'm tracking aren't what everybody else is looking at. I don't care about yield. I don't care about tours. I don't care about all of these things.
You don't care about crop conditions, you said.
I do not care about crop conditions. One of the things I'm known for is calling that the Kardashians of USDA reports. I do not care about any of that stuff. What I'm looking at is the future spreads and forward curves, and that's telling me a completely different story than what everybody else wants to hear. We've got strong carry going in both corn and soybeans heading into, hopefully, harvest at some point. And this is telling me the commercial side is getting very comfortable with the supply and demand situation. That doesn't tell me anything about supply. Could be speaking about just as much about demand. So whatever the case, it's not as bullish as what everyone wants to believe. Could we have small crops? Absolutely. Does it matter right now? No, because we're looking at an overall supply-demand situation that's growing a little more bearish as we go along.
And we had an analyst on a few weeks ago. He talked about corn basis being really hot. What has been basis doing lately as we get further into the season?
Corn basis has stayed strong. Well past its normal seasonal peak. And it's very interesting because we could be looking at 2.4 billion bushels of ending stocks coming out of one year, becoming beginning stocks for the next at the end of this month. And normally you wouldn't expect a strong basis to be played along with that. But what's happening, what looks like to me, is that we've got some hoarding going on. All those areas in the eastern corn belt where they couldn't get planted or the crop's just not going to be there, it looks like they're planning on using some of the 2018 bushels to replace what's been lost in 2019. So the plan is they're going to spread those out over the next marketing year, keeping those bushels off the market here in front of what's normally a harvest, where we start to see a harvest sell-off in basis. That's not happening. I think it's because those bushels are being held back. We don't have great demand right now, but just the fact that these bushels aren't making it into the market is helping to keep basis supported.
And looking at wheat, I know there were some things you wanted to hit on as far as that goes too.
You know, the wheat market is I guess, interesting in a way, in that seasonally this is the time of year it just collapses, and that's exactly what we're seeing. We tried to see some buying come back in here and there, but it's never enough, and so we're seeing it getting fundamentally weaker. We're seeing basis levels start to slip again. There's a lot of wheat out there, and the fact is, even though that we had this heat wave hit Europe and supposedly it was going to help the U.S. situation, we just haven't seen more bushels called for from the United States. The demand for our supplies hasn't picked up. So we're starting to see the market sag again. The possibility, I've heard from a friend that he received a letter from USDA FSA in his area up in northwest Minnesota that they could be facing LDP situations again for spring wheat. That's a horrible thought. And if not for the weather, we'd probably be facing a similar situation in corn and beans. We'd probably be facing LDP situations. So wheat is just ugly market right now, and seasonally it just doesn't look like it's going to get better for a month or two.
And quick question about cattle. Last week's show we mentioned that fire at the Tyson plant in Kansas. So as a reminder, everybody, this plant responsible for about 5% of the weekly cattle industry's slaughter. So is the market still a little bit uneasy from this, or everything settled down pretty quick?
from a market point of view, it looks like it's settled down. But the most interesting thing to me was that this was a pure chaos event. In other words, an event that brings to mind chaos theory, this unforeseen event that changes the direction and changes where we wind up. We have to redraw everything we thought we knew about fundamentals and technicals and start over, and that's what we've done this week. We've seen the market stabilize. We've seen both live cattle and feeder cattle stabilize, but we're stabilizing in much lower prices. Where we go from here, you would think we would be able to rally at this point, but we've got to see the commercial buying, and we're towards the end of grilling season, so it may be too late for a great deal of commercial buying to come in and support this market.
And Darin, before we let you go, any other marketing or risk management tips that you want to leave us with today?
You know, we've got this new, we've got the CME's revised storage rates in corn and soybeans heading into this new marketing year, 8 cents per bushels per month. And so again, it's changed the way that we have to read the forward curves and the cost of carry. Right now, in soybeans, we're still hanging around that 50% coverage in that Nov to July timeframe. If we were to use the old metrics of 5 cents per bushel per month, we'd be well beyond 70%. So it's still bearish. The old metrics would be extremely bearish. Right now, we're neutral bearish. So if we've got some November hedges on or some prices in place, and if we've got some December and we don't really want to move it this year, we might be looking at these spreads right now as opportunities to roll these hedges out. So that there's not much else to do right now except to look at these spreads. If I've got some hedge to arise, if I've got some hedges, you may want to look at these spreads to see if there's something attractive on out in the future.